What's up, everyone? Dylan here. I wanted to hop on to go over a few things ahead of the next 3 days, which include some key events that can ultimately shift overall sentiment in the market. Before we hop into it, if you're wondering what happened to my hair, I am wondering the same, right? I don't know where it went. So, the next 3 days include some key events as noted, starting with the Fed decision tomorrow at 2 p.m. Eastern Time, followed by Fed Chair Powell's press conference at 2:30 p.m. Then on Thursday, you have the initial jobless claims at 8:30 a.m. Eastern Time. And then Friday, despite it saying none scheduled, there's also two very, very important events which we will get into that include the S&P rebalance as well as March OpEx. So, you'll notice that I already have some key areas outlined, and if you watch my latest video that I posted, I believe last Tuesday, these were the exact levels and lines that I posted. Just now it's on the June contract as the March contract is expiring this Friday. So the only other line that I have added is this gap fill from the weekend, two weekends ago. So this gap fill here is the only new line that I did not include on last video that I believe is going to be very important going forward. So we'll make that a different color. All right, so this is what I am working with, okay? To the downside, we have the correction territory, which just represents a 10% drawdown from recent highs, right? That lines up with 5596.75. Then we also have the swing low from September 6, 2024. As you can see, the market tested down there a few different times and ultimately stabilized pretty nicely. And then if that area were to breach, right, if last week's low were to breach, I would expect the S&P to head down to this trend line stemming from July of 2023, which has tested 1, 2, 3, 4, 5 different times. Each one of those 5 times has acted very, very nicely at that line. So I would expect that line to yet again act as support. And ultimately, it will be a good area to gauge price action around. Okay? As you can see, NASDAQ recently retested the trend line, the critical trend line retest that was established back in October of 2023. So it tested that line on the retest on yesterday, Monday, right? So you could see that was the first retest since it breached back on March 10th, Monday, March 10th. And clearly the bulls were unable to sustain value above, which ultimately led to a sell-off. Okay, so going forward, if the next 3 days worth of events produces a nice rally, ultimately the bulls want to sustain value above that trend line, right? Again, that trend line stems from the October 2023 lows, and it was tested on yesterday before moving to the downside today. Okay, so if a rally occurs over the next few days, the bulls would want to see not only a breakout above that trend line, but also the ability to sustain value above. Okay, that would be ideal. Okay, if the next few days trigger a bounce, right? The next levels that I am looking at going to the upside are the gap fill on the S&P futures at 5822.5. And then if that manages to get broken through, right? If the bulls remain resilient and manage to break above that, the main key area to the upside that I will be looking at is the 50% retracement on the NASDAQ from recent highs to recent lows, which also lines up with the 200-day moving average, right? As you can see, the 200-day moving average and the 50% retracement line up very, very nicely. And ultimately, I believe that that is going to be a very, very, very important level to gauge if a rally begins and really starts to hold value nicely and trend higher over the next few days. Okay, so call it 20,935-ish. Okay, so to the downside again, if this move to the downside continues and we breach last week's lows, I would ultimately assume that that line will be tested on the S&P. Okay, so now we have both upside areas to look at and downside areas to look at, where I will be judging price action, gauging price action around, and ultimately trying to come up with actionable trade ideas around. Okay, so one thing I wanted to talk about has been the recent price action we've been seeing. So ever since Thursday of this past week, right? Thursday we had broken below that 5580 previous swing low from September of 2024, but we quickly recaptured back above that. And then since then, the market has been doing a very, very good job printing higher highs and higher lows. Today was basically an inside day relative to yesterday, as yesterday's high was not taken out, nor was the low taken out, right? Today we bounced right at yesterday's low on the S&P. So today was kind of like a nothing day. But since Thursday, the bulls have done a very, very nice job stabilizing price after a 4-week drawdown, and really, really holding on to sentiment. Okay, and what I mean by that is this. I want to go back to the Discord. This was posted on Friday. So Friday morning at 10 a.m., the University of Michigan sentiment came out, and it was a very, very bearish number, right? It fell to the lowest since November of 2022, and long-run inflation expectations hit a 32-year high. On top of that, the AAII Investor Sentiment Survey showed that 59.2% of individual investors are feeling bearish about markets over the next 6 months. Yet, the market managed to really, really stay resilient and absorbed that bearish news very, very nicely. So this news came out right around here. So what I said in the Discord is, yet the equity indices handled it well, still doing a good job sustaining despite the bearish sentiment print. Okay. Then I went on to say the resilience should not go unnoticed. This is the first time ES has absorbed bad news in weeks. Could be an early sign of continued strength. Continue to gauge dips that occur. Bulls need to defend that general area down here, those two blue lines. Okay, so that was a key sign, a telltale sign that we have not seen in weeks, being that despite bearish news that came out, the S&P and the NASDAQ barely dipped. Okay, so if bearish news continues to surface and you realize that the S&P and the NASDAQ are not really pulling back, that's a good sign that the bulls are remaining very, very resilient and actively in the market defending dips. Okay, so that's a very, very good thing to look at going forward. Not even in near term, but from now on, right? That's a good trick that I've been using in the market for years. Okay, so let's talk about the Friday, right? This Friday. Okay, those dates are very, very important. And as if you remember from a few videos ago, I talked about some dates in the Discord. Let's go to it. So on February 12th, I talked about 3 different dates. You had February 21st, which was the Feb OpEx. Then you had the February 28th MSCI rebalance. And then coming into this Friday, you have March 21st is March OpEx as well as another rebalance. Okay, so what I said back then in the other video that I talked about these dates is using these dates and gauging the price action that occurs into these dates is a very, very massive edge, okay? Depending on the price action that leads into these dates, it can be a very, very powerful indication that overall sentiment is changing, okay? Let's talk about February 21st. That was February 21st right here, right? What I pointed to, I'll circle it as well. That was precisely the first big day to the downside that basically flipped sentiment in a bearish manner and ultimately caused a 3-week, 4-week downside move that fell as much as 10.5% in the S&P and over 14% in the NASDAQ. So that was a pivotal move, right? That was a pivotal date that flipped the sentiment. Okay. Then on February 28th, we had a massive move to the upside. Again, that pivotal date flipped sentiment from bearish to bullish. Yes, it did not sustain, right? And a few days later, it was making new lows. However, it's a very important date to look for, okay, or look into. So now we're heading into the next key date, which is March 21st, which is this Friday. So essentially, the price action heading into that date will be very, very important, okay? Ultimately, that could be a date that the price action flips from selling rallies to buying dips, okay? So the sentiment can ultimately change from where you see S&P rallies getting sold to now S&P dips being bought, okay? Is it guaranteed that that will happen? Of course not, but all I'm saying is that date is going to be very, very important. So essentially, let's talk about some hypotheticals. If the market sells off into that date, I think it will be a pretty good buying opportunity, okay? Especially if the sell-off into that date coincides with a key support area on the S&P and or the NASDAQ. If it rallies hard into that date, let's just say it rallies up to here in the next 2 days leading up to Friday, that could be a pivotal sign that the market is going to decline after that Friday. Okay, so ultimately what I'm saying is really, really pay attention to the price action leading into Friday, as it can be a pivotal sentiment change. Okay, and that's basically where I'm going to leave off on. And then when I do a video, the next video I do will probably be after that date, where I talk about what to expect going forward. But ultimately, again, watch that date very, very closely, being that the last OpEx resulted in a massive drawdown. So we'll see what happens going into the March OpEx. Okay, so again, you guys know exactly where I'm going to be looking at, right? S&P downside, this trend line. To the upside, you have that gap fill. And then the NASDAQ, to the upside, you have that 50% retracement, which lines up with the 200-day moving average. So hopefully this video was helpful, and I will talk to you guys soon. Peace.